we'll be looking at principle of accounts and economics while we wait for your lecturer to join. Partnership is one of the content. What is partnership? We'll be looking at what is partnership. We'll be looking at profit and loss account. We will be looking at appropriate account. We'll be looking at manufacturing account. We'll be looking at incomplete records, meaning futures, advantages, and limits. We're also going to be looking at single and double entry system for accounts. Your chapter 7 will be accounts, bank accounts. Chapter 8 will be royalty account. Chapter 9 will be contract account. This is going to be the content of our discussion. Today, we'll be looking at what is a partnership. We all know what partnership means. Partnership, purely from what is written here, is a business structure whereby two or more persons share ownership. This partnership share any profit. Sometimes they share costs, they share risk and responsibility. When two or more individual or institution come together to work upon a business venture, it is known as a partnership. So the proportion to which they share risk, cost, profit will be dependent solely on the input of their partnership. The accounting for a partnership is essential, that same as is used for sole proprietorship. We should know the difference between a sole proprietorship and partnership. A sole proprietorship is a business that is run solely by one person, while partnership is a business that is run by the combination of efforts of more than two persons. So when two or more persons come together for the aim of running a business, it is known as what? Partnership. Next, we'll be looking at an overview of partnership structure. A partnership is a type of business organization structure where the owner have unlimited personal liability for his business. Unlimited personal liability for his business. The owner share in the profit. The owners share in the profits generated in the business. We have multiple kind of partnership. When you want to form a business with your friend, you can start a recharge card business. You can start farming business together. Same business, you put in money together to start same business. Such business is known as partnership. So it is important that from the beginning, both of you understand the level to which you have been engaged in such business, so as to know what risk and how you share your risk. Accounting for partnership is very, very important. There are several distinct transactions associated with a partnership that are not found in other type of businesses. We have contribution of funds. Contribution of funds must be properly accounted for, and when funds are contributed, because contribution of funds to a large extent would determine the sharing of profits. So it's important that accountants put into consideration how contribution of funds is being accounted for. When a partner invests funds in a partnership, this transaction involves a debit of the cash account. You know, we have the debit and the credit section, and the credit to the separate capital account. So you must understand this clearly. Let's look at contribution of other funds. Apart from physical cash, there are contributions that can be made. Contribution in terms of intellectual properties, contribution in terms of assets. This also need to be accounted for, because when you run a partnership with someone, contribution from each party is not just physical capitals alone. There could be other form of contribution. It could be idea, it could be property, it could be assets, it could be royalty, it could be anything. This must be properly accounted for. Then contribution of other funds is I'm talking about the withdrawal of funds. Withdrawal of funds usually means when a party wants to take part or all of its contribution or profit that is made from the business. When a partner extracts funds from a business is meant to generate funds. A business is meant to house funds, capital. Now, when a partner wants to extract funds from a business, it's known as withdrawal of funds. It involves a credit to the cash account and a debit to the partner capital account. So you should be able to understand this clearly. Withdrawal of assets. I spoke about assets initially. We have said contribution could be in form of assets contribution. When a partner has extract assets than cash from a business. For example, an asset in a poultry can be a land. So a partner can say, I have a land, I want to contribute. That land must be evaluated in terms of a cash contribution. So when a partner wants to take land back, that it involves a credit to the account in which the asset was recorded. So if the asset was recorded in partner A, it becomes a credit to the account of partner A, and a debit to the partner's capital. So it becomes a debit to his capital account because it was contributed before. Now it has been taken out, so it becomes a debit to the account. Allocation of profit and or loss, you must be able to understand how loss and profits must be allocated in any business. It's very important. If during your exam you are asked how and when do you allocate profit or loss in a partnership business, you should know that when a partnership closes its books for an accounting period, the net profit or loss for the period is summarized in a temporary equity account called the income summary account. So my number one assignment to you is to explain briefly what is an income summary account. Number one assignment, explain what is income summary account. This, so let us, well, I'm going to be taking that assignment from you before the next class, meaning 1 week from now, you should have submitted the assignment to my email. Please, when submitting your assignment, remember to put your name, your center, and your phone number. My number one assignment is what is, explain briefly what income summary account means. Then let's go to tax reporting. Tax reporting. In the United States and many parts of Nigeria, a partnership must issue a schedule K1. K1 is a document issued by government to partners in order to file their tax. So even in Nigeria, we also have tax reporting system for partners. This schedule contains the amount of profit or loss allocated to each partner and which the partner use in their reporting of personal income earned. So you must also understand that. Let's quickly go to general partnership accounting information. When we talk about general partnership accounting information, you must understand that when one person enters into a business together with another, a partnership is formed. Now you must understand, we have talked about that. In the best case scenario, a partnership agreement is drafted and the rule of partnership are expressed to all the partners. Yes, when a partnership is formed, it's important that the partnership is drafted so that they understand the legal duty of both partners. Why this is not necessary to legally create a business partnership? If you are doing business with someone else, understand some basic partnership accounting information can help you make sure your organization records are in order. It is very important we understand this, that once you're able to do that, then you must have a partner account. Each partner must have the account. 2, you must ownership change. Whenever there's ownership change, there must be a document towards that. Partnership liquidation, when a partnership runs out of cash, I want to liquidate, you must understand that. So quickly, my number 2 assignment will be explain briefly partnership liquidation. What you understand by partnership liquidation is very important. So I have 2 questions for you. Number 1 number 1 question was to explain in summary what you understand by income summary accounts, and number 2 is what explain what is partnership liquidation. Submit your assignment to irenuba@yahoo.com, irenuba@yahoo.com. Thank you for joining this class. I understood that we had little issues at the beginning of the class, but I believe our next class will be smoother and better than this. Thank you, students of JPTS, and please submit your assignment before our next class. God bless you all. Stay safe.